Hey there, it's Mike Wise, CMG Home Loans with your weekly mortgage update. And the Fed met this week, and guess what they did? Absolutely nothing. No change to the rates, to the Fed funds rates, which means mortgage rates really have not done much at all. So let's take a look and see what we've got going on, what we had going on this week. So let's look at the current mortgage rates as far as kind of where we are today. So usually I finish off with this, but we'll start off with this today. So currently the market is really flat. There's not much movement here. The 10-year yield is sitting at 4.42 this morning. And again, we're kind of let's look at it at the yield here. So we are looking right around here, and we're trading in this range between the 25-day and the 50-day moving average. You can see all these averages that you can see up here. Those are the averages, and so you can see they're all kind of coming together, and we're trading right within that range there. We thought maybe we would break out down here and get down into these into the 430 range, maybe even get down to the 420 range, but we have not seen that yet. We may get there, but a lot going on in this world as far as the Israel and Iran situation are they're impacting. Oil prices are going up. That's inflationary. That's not good for interest rates. Wars, though, are actually good for interest rates. So if the U.S. gets into the war with Israel to fight Iran, there may be some improvement in the rates, but the oil prices are another kind of driving factor. So you kind of have a lot of things moving against each other. Interest rates. So we're 6.89 was where we were last week. We're at 6.87 today. So again, the interest rates, they're really just kind of going sideways here right now. Kind of wait and see as to what's going on in the market. So there's not much going on with the interest rate. So why do we say that? Well, here's the dot plot, or the kind of the Fed Watch tool that we have. The Fed, they decided that they were going to keep interest rates the same going forward for the next 30, 45 days. And that was not surprising at all. It is something that I feel like they need to lower the interest rates, but they're blaming it on the tariffs, the possibility of the uncertainty of the inflation that the tariffs might have. But the Fed sees higher inflation, lower growth ahead. So again, high inflation, that's not good. Lower growth, that is something that will help bring rates down. So there's, again, a lot of uncertainty is what they say. At the end of the day, I truly believe that they could have lowered the interest rates by a quarter. It would not have really had any much impact whatsoever. And it would have given the consumer the confidence that they are moving towards lowering the interest rate. So going back to kind of this, the Fed Watch here, this is the July meeting. So the dark blue area right here, this is the July meeting. So most of the Fed members are saying there's an 85% chance that they are going to stay the same. They're not going to lower them in July. And you can see that the percentage, it went up and then it's come down a little bit. So there's a more chance of it going down right now than there was last month. But at the end of the day, it looks like September. So this is the 4.25 to 450, which is where we're at today. And right now, a lot of the Fed members are saying there's a 60% chance that they are going to lower them in September. So there is relief coming. At the end of the day, what I would like to say is that the mortgage demand has fallen. There's not as many people out there looking for houses. Now, I think that this is a perfect time to buy. We've had a couple of deals where we've gotten $40,000 worth of seller credits. So we went in with an offer, got credits up front, did their inspections. They got more credits on top of that. So I do think that even right now there's less people looking at houses, graduations, summer vacations, all that stuff. Normally this is a pretty strong time of the year to buy a house, but it's down because interest rates are probably up. The whole tariff thing a month ago kind of scared everybody away. And I think that there are some people, some sellers that need to sell their houses. They're dropping the prices on houses, and they're giving a lot of seller credit. So if you are in the market to buy a house, it is a good time to buy, even with interest rates where they are today. Get into a house, start gaining that appreciation, because the prices, they are staying pretty strong right now. Even though they're dropping a little bit, they're very, very strong. And I do think the demand for housing is out there. There's a lot of pent-up demand for the housing. So I think that even as the mortgage rates, they kind of stay the same here. They've gone down just a low since April, but that's still not a big change. So at the end of the day, it is a good time to go in with an offer with seller credits to be able to get a lower interest rate, and we're seeing that. So the Fed, the reason why they did not cut the interest rates was because of the inflation. So they're kind of, last year they actually did drop the Fed funds rate by 1%, even though there was inflation at that point in time. And so they dropped it in like September, October, November by 1%. And I do think that was more of a political thing than anything else. And now it is probably more of a political thing as well. So we're trying to kind of work through that, and the consumer is kind of wading through all those issues. So at the end of the day, again, I do think that it is a good time to buy a house. Get in now while the prices are kind of muted a little bit, and the sellers, there's more listings on the MLS right now, so there's more opportunities to go out there and buy a house. I do see the interest rates coming down. In fact, if you look at, let's look one more time at the vibe board, and we're going to go here, and we're going to go to the dot plot, the chart. This does say that we're going to see interest rates. This is 2025, so they're going to drop them here. So we do see those interest rates going down. And then one more thing here. This is the SOFR index, the secured overnight financing rate. This is going to be starting to go down. So we do see that interest rates are going to fall here. They're going to go down. We just need some time. But anyways, now is a good time to buy. This is Mike Wise with CMG Home Loans with your weekly mortgage update. I look forward to seeing you next week.